Welcome to the April 2026 edition of the GECF Monthly Gas Market Report. We would like to present a short overview of the main highlights of the report, which include the major developments in the gas market during the last month. In April 2026, Oxford Economics estimated the global GDP growth for 2026 based on purchasing power parity at 2.9%. Driven by the ongoing geopolitical crisis in the Middle East, this estimate reflected a reduction from the previous month's level by 0.4 percentage points. Looking ahead, global economic activity is expected to recover, with GDP growth in 2027 forecasted at 3.3%. At the country level, US GDP growth estimates for 2026 decreased by 0.9 percentage points in April to 1.9%. In 2027, GDP growth is forecast to strengthen to 2.7%, reflecting an expectation for strong productivity growth. In the EU, 2026 GDP growth was estimated at 1%. Growth in 2027 is likely to rise to 1.6%, supported by Germany's fiscal stimulus. Due to its relative insulation from Hormuz energy restrictions, China's GDP growth for 2026 was unchanged at 4.7%, and growth is expected to slow in 2027 to 4.1%. India's GDP growth for 2026 was estimated at 6.2%, with the outlook for 2027 rising to 6.8%. In the first 2 months of 2026, aggregated gas consumption in some of the major gas-consuming countries, which account for 75% of global gas demand, increased by 1% year-on-year to reach 662 BCM. Growth was recorded in the EU, Middle East and Asia, while North America recorded a decline. In March 2026, EU natural gas consumption declined by 4.4% year-on-year, reaching 30.4 BCM. The reduction was mainly driven by lower heating demand in the residential sector, reflecting milder weather conditions across much of the region, although weather conditions varied across the continent. Electricity generation in the EU increased slightly by 1% year-on-year, reaching 224 terawatt-hours. However, gas-fired power generation declined by 12% year-on-year, largely due to a substantial increase in wind, solar and hydro output. In February 2026, China's apparent gas demand, which includes domestic production and gas imports, recorded a decline of 2.2% year-on-year to reach 33 BCM. Warmer than normal temperatures in North China reduced heating needs and discouraged restocking by city gas distributors. Gas demand also declined due to the holiday period during the month, which delayed factory restarts and kept industrial activity below normal levels. In March 2026, US gas consumption increased by 0.5% year-on-year to 77.4 BCM, reflecting higher demand in the power generation sector. Residential and commercial gas use declined by 9.3% and 8.4% year-on-year respectively. Industrial gas demand also slipped by 0.3% year-on-year. In February 2026, global gas production grew by an estimated 3% year-on-year to reach 353 BCM. All the main gas-producing regions, except Europe, witnessed positive production variation, with Eurasia and North America, specifically Russia and the US, leading the growth. European gas production recorded a 2.4% year-on-year decline in gas production to 14.7 BCM. This decrease in the European output was mainly driven by lower gas production in Norway, the UK, and the Netherlands. However, the magnitude of the overall European production decline was limited by the higher supply from Denmark's gas production. In February 2026, China's gas production maintained its growing trend to reach 21.7 BCM, representing a 1.7% year-on-year increase, driven by new gas projects commissioning. Meanwhile, in March 2026, US total gas production continued its growth trend, to record a rise of 2.1% year-on-year, to stand at 96.1 BCM. This growth reflected the favorable market dynamics, driven by the increased Henry Hub gas prices, along with the increased feed gas directed to LNG exports terminals. In March 2026, the EU countries imported a combined 12.9 BCM of PNG, which was 10% higher month-on-month, and 3% greater than 1 year ago. After the first quarter of 2026, cumulative PNG imported by the EU reached 37 BCM, increasing by 3% year-on-year. Norwegian exports to France and Poland each increased by 28%, while flows to the Netherlands recorded a significant 42% decline. In addition, there was 0.6 BCM of net gas imports from the UK via the interconnectors with mainland Europe. In February 2026, China imported 6.4 BCM of PNG, which was 3% lower month-on-month due to curtailed gas demand during the Lunar New Year holiday period, as well as a rise in domestic production. After 2 months of 2026, cumulative Chinese PNG imports reached 13 BCM. Global LNG imports declined by 1.7% year-on-year to 36.3 million tons in March 2026, marking the first contraction since January 2025. The decrease was driven by reduced Middle Eastern supply, particularly from Qatar, following disruptions through the Strait of Hormuz, which weighed on imports across key markets. In Europe, this was compounded by weaker gas demand and higher pipeline imports, reducing LNG intake, while in Asia, imports fell to the lowest March level since 2019, led by declines in China, India, and Pakistan, partly offset by stronger imports in Taiwan and Thailand. On the supply side, global LNG exports fell by 6.8% year-on-year to 35.8 million tons, driven mainly by a sharp decline in Qatar's LNG exports due to the Middle East conflict, partially offset by higher exports from the US and Canada. March typically marks the final month of the net gas withdrawal season in Europe. In March 2026, the monthly average underground gas storage level in the EU decreased to 30.1 BCM, which represents 29% of the region's capacity and stands at 13 BCM below the 5-year average for that month. In Asia, driven by increased heating demand and supply restrictions amidst the Middle East crisis, the combined LNG stocks in Japan and South Korea were estimated at 9.7 BCM, which was 0.3 BCM less than the 5-year average. In the US, the monthly average storage level fell to 53 BCM or 39% of capacity. Net gas withdrawals during this winter season concluded at 60 BCM. In March 2026, regional spot prices surged amid the escalating conflict in the Middle East, which disrupted LNG flows through the Strait of Hormuz, where around 20% of global LNG supply transits. TTF prices rose by 58% month-on-month to $17.80 per million British thermal units, while Northeast Asia spot LNG prices surged by 94% to $20.90 per million British thermal units, reflecting tighter market balances, cargo diversions to Asia and heightened volatility. Despite the supply shock, prices remained below the 2022 crisis peaks, with the prices being supported by higher LNG exports from the US and Canada and weaker seasonal demand. In contrast, HH prices declined to $3.10 per million British thermal units amid softer heating demand and rising production. Thank you for watching this short video presentation on the April 2026 edition of the GECF Monthly Gas Market Report. We invite you to download the full report from our website at www.gecf.org, or you can scan the QR code.